Good morning. Welcome to Trading Hour. We are coming to you live from CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar, and with me is Hormuz Fatakia. It's 11 o'clock. Markets down close to about 0.5%. So after yesterday's bounce, things have weakened in our own markets. We started flat, but now we've lost about 100 points. The Nifty is at the 24,600. So we couldn't manage to hold on or build on yesterday's gains, and that's a bit disappointing. Sectors which are under pressure, capital market plays. The Nifty Capital Market Index is down close to about 1.5%. Realty, FMCG, IT, and Pharma. All these four sectors are down anywhere between 0.6 to 0.8%. Banks are also struggling in trade, particularly the large cap bank. The Nifty Bank, too, is down close to about 200 points. And what doesn't help is, Donald Trump, the U.S. President, just escalating the pressure on India when it comes to tariffs. So all that's weighing. The mid-cap index, too, is down close to about 0.6%. But for that, keep in context that yesterday we were up nearly 1.5% on the broader markets. But Hormuz has now moved over to the big wall. Actually, he started the show at the big wall. Hi.
Hi, Reema. It's a sudden and sharp fall that you've noticed in the capital markets index, particularly when you're counting down to a major listing tomorrow, that of NSDL. Keep an eye out on that. There has been significant interest for that name when it comes to the IPO. Well, to move on to the movers then within the broader markets, there are a few earnings reactions. We are counting down to a lot of earnings as well. And Triveni Turbine is among the top losers today within the broader market space, 7.5% lower. But it's not like the stock has fallen only today. It's been an underperformer for the last couple of weeks now and has gained only twice in the last 12 trading sessions. And over 25 lakh shares have already been traded in today's session within the first couple of hours of trade compared to a 20-day average of just 2.5 lakh. PSP Projects was a big drag in yesterday's session. Today, the stock has clawed back some of those losses but is off the highs. Promoters offloaded some of the stake. Adani Infra was the buyer in that block deal. Almost 1 crore shares were traded yesterday and 6.5 lakh shares have already been traded today. The 20-day average comes up to just around 1.5 lakh. So for now, 3.5% higher on PSP Projects as well. Now, Newgen Software is the other one. Was a big underperformer over the last couple of weeks. In the last two sessions, the stock has gained well over 10%. Now it's almost 10% higher in today's session itself and on the back of very strong volumes as well. Now, in comparison to a 20-day average of just over 2 lakh, we have seen already 12 lakh shares being traded on the stock. And a result reaction today is Godfrey Phillips. Mangalam spoke about the factors that aided the quarter gone by. The company has also announced a bonus issue, 9.5% higher on that stock. It's at a 52-week high and 6 lakh shares, almost 7 lakh shares now already traded on the counter compared to a 20-day average of just 1 lakh. And an interesting bit here is the fact that barring the month of January, the stock has gained every single month in 2025, taking its year-to-date advance to around 90% now. So the stock has almost doubled on a year-to-date basis within the first 8 months of the year. Positive earnings reaction on Godfrey Phillips, but some pressure within the broader markets.
Thank you very much for that. I think we're getting some news on Anil Ambani. He's reached the Enforcement Directorate office in Delhi. You can see the visuals up for you on your screen. He was summoned questioning as a part of the ongoing probe into an alleged 17,000 crore loan fraud case. So that's the ED probe, which is ongoing, 17,000 crore. And that's Anil Ambani at the Enforcement Directorate headquarters in Delhi. Live visuals coming through. But let's get to more stock-specific action back home in India. Vivek is now joining in with the standout brokerage report of the day that Nimesh highlighted earlier in the morning. Vivek?
Well, that's right. So our colleague Nimesh highlighted earlier in the morning a standout brokerage coming in from US, a deep dive that they've done as far as the power OEM sector of India is concerned. So what is it that they like? Number one, they have an anti-consensus positive stance as far as number one, both thermal ordering as well as solar module manufacturing is concerned. Remember, overall street is quite muted in terms of the prospect, saying that thermal is likely to fade away. However, UPS on the other hand actually says that there is an upcycle ahead in terms of ordering, and they believe that the advantage actually goes to incumbent leaders. So where are they positive on? Number one, they've initiated buys and they have buy ratings on BHEL, Wari, Premier Energy as well as Suzlon. Thermax, they've maintained the buy rating and have actually increased the target price to 5,100 rupees a share. What is it that they like in terms of for BHEL? Number one, they like the rising thermal orders that the company set to bag. And remember, it's almost a moat, especially when it comes to BL as far as construction of thermal power plants in India is concerned. They believe net profit is likely to rise 8x by FY28. When it comes to Premier Energy, in terms of integrated manufacturing capacity in the solar cell module space, they like that. They also like the company's 10 gigawatt backward integration capacity could drive 34% top-line growth, 36% EBITDA CAGR from FY25 to FY28. Waaree Energy, again, very similar, capacity-led earnings acceleration underway. They expect almost a healthy 620 basis points EBITDA margin expansion. And lastly, when it comes to Suzlon, they believe that the sector tailwinds as well as competitive edge may actually lead to earnings growth as far as this wind turbine generator OEM is concerned. They also like that the company's annual deliveries right now at 1.5 gigawatt. They expect it to go ahead and see a significant uptick to 4.2 gigawatt. Overall positive on power OEM as well as the solar space.
Interesting list there. Vivek, thank you for that. And in this list, Waaree is the one that UBS sees the highest upside potential of 40%. And the rest too is anywhere between 20 to 40. So a very bullish note coming in on all of these names. But, well, it's not reflecting on the price today. Waaree is at the lowest point of the day now. Suzlon is the other one, is where they see a 20% upside as well, does UBS. And that too has given up most of its gains now, trading around the flat line is Suzlon. But shifting back to the stocks on the move, I highlighted Godfrey Phillips in just a bit from just a few moments earlier as to why the stock is moving higher. But Mangalam is here to break down the numbers as to what actually contributed to this 9% up move. Mangalam.
Well, if you're growing to, I'll just say that again, because if you're growing at around 4 or 5 times the industry leader, then you are bound to see the kind of stock price move that we're seeing on Godfrey Phillips as well. 38% revenue growth is what the company has reported, closer to 1,500 crores on the top line. This compares with 1,079 crores that the company did earlier itself. And we did see margin compression for ITC as well, but that's come by for Godfrey Phillips too because of high leaf tobacco prices. But when you're growing 38%, a 25% EBITDA growth looks a lot better than growing at 7% and then the EBIT growing at around 3 to 4% itself. And as a result of which, the net profit has grown 25%. And it's been the last 13 or 14 quarters, if I remember correctly, where Godfrey has been outpacing the industry, not just ITC, but VST Industries as well. And that continues, which explains why the stock is higher by almost 100% this year itself. And prior to that as well, we've seen a big move. Add to all of this, the company has gone ahead and announced a 2:1 bonus. So that's a positive for shareholders. And they've also stated their intent to go ahead and get rid of their retail business. They did that about 3 quarters ago. So all the strategies in place for them to continue to gain market share and grow faster than the industry.
Thank you very much for that. Get into a break. On the other side, we put the focus on the crypto market. Manisha Gupta joins in.
Welcome back. Still continuing to hold on to that 25,600 mark on the index as of now. Still 100 points lower is where we stand. But shifting focus now to commodities, and Manisha is here to put the spotlight on crude oil prices after yet another increase in production approved by OPEC Plus. Manisha.
Well, yes, and markets weren't expecting a huge number, but what we have seen from April, May and June, and then, of course, extended to July and August and now September as well, we'll see 547,000 barrels per day of further hike in output coming in from the OPEC. Well, the 8 members clearly are eyeing the market share. What with all these geopolitical tensions and the US talking about not just primary but secondary sanctions as well coming in on Russia, we have seen pressure come in for the crude oil prices. The markets as of now do not believe that you could be looking at those kind of sanctions on Russia, because if that happens, then we are looking at a very big chunk of Russian oil getting out from the market. That could lead to a spike in prices. And most global banks and brokerages believe that even if that happens, would be for a very short period of time, because one, you will have OPEC supplies coming into the market. US has been increasing production, and at these higher prices, whoever is holding in sense of production spare capacity will start to come into the markets. Well, actually, most banks and brokerages are talking about lower prices going forward. If all goes fine and we do see this conversation settle down after sometime in the month of August, the fourth quarter could actually be looking at lower crude oil prices. Goldman Sachs has talked about $64 a barrel for Brent, and the first quarter could actually see 56. We were talking to Mizzou yesterday, and they've talked about sub-$60 barrel prices by the last quarter of this year. So not too many banks and brokerages are very bullish on crude oil prices from here. They believe that whatever is happening is going to be very short-lived, a near-term phenomena. By the end of this year, you could be looking at 50s and 60s in case of crude prices.
Thank you very much for that. So today the IPO of Knowledge Realty Trust opens. Now this is a REIT. It would be the third REIT in India which is in the commercial office space. The fourth one is the Nexus, which is largely catering to the retail side of the segment. Now Knowledge Realty Trust will be the largest REIT in India based on the gross asset value, which is close to about 60,000 crore. It will be the second largest office REIT in Asia, and their portfolio currently comprises of close to about 46 million square feet of a total area. The occupancy has also gone up from about 85% in 2023 to about 91% as of the last fiscal year. And some of the tenants that they have in their company include Amazon, Cisco, Franklin Templeton Asset Management, HDFC Bank, amongst others. So it's a healthy mix of GCCs as well as a lot of multinational companies. Yesterday, we got the announcement that the company has raised about 1,620 crore via its anchor book. Shirish Godbole, the CEO of the company, and Kaiser Parvez, CEO of Knowledge Realty Trust REIT, are now with us on the company. And this is a company which is backed by Blackstone, sponsored by Blackstone and the Satwa Group. Thank you very much for joining in, gentlemen.
Thank you for having us.
Thank you. So, Shirish, let me start with you. I remember from an earlier interview of ours where you spoke about targeting a mid-teens kind of a revenue growth. That's what shareholders should expect. See, that's ultimately what matters, right? So take us through the math behind that number. And how is your REIT different from what's available in the market right now?
Sure. So mid-teens total return is what we had discussed. And current return, a dividend yield of 7.2% stabilized, going up to 7.7 and 8.7. So a mixture of fixed return plus upside through NAV appreciation over a period of time. That's the mid-teen return. That's what we had discussed, and that's what we're looking forward to provide to our investors. And how we differ is in a number of ways, honestly. First of all, I think we've got a very solid portfolio of assets. They are very well located, diversified, primarily in the best office markets, Mumbai, Bangalore, Hyderabad. We also have a very small SEZ component. In today's markets, leasing SEZ space has not been easy thanks to the rollback of the tax concessions from the government. Third, we have a very good internal growth story. We have significant CAGR, as I've called it before, compounded annual growth rate per year of our NOI growth, which is 13%. And our mark-to-markets, the rents are way below where market rents are. So we have a 20% upside sort of potential to increase those rents over a period of time. So that's very positive for internal growth.
So for what percentage of your portfolio can we see a 20% escalation?
So it's $1.5 million per year sort of maturing. And so 1.5 million square feet per year will roll over, and that will see the appreciation
of 20%.
Of 20%, right? But going back, the fourth thing we have is a very good external growth story. So we have a mindset to acquire assets. We have a brand neutral platform in Knowledge Realty Trust, and we want to use that brand neutrality to attract more sellers into our portfolio. So we'll be growing and with an active mindset to acquire, which has not been the case, with other competitors going past. But the most compelling reason, I think, is when you add that together and offer it at our yield. We're offering 7.2, as I said, stabilized, where someone like an Embassy is trading below 7%, and then someone like a Mindspace is trading below 6%. And frankly, we think we have all the attributes, if not more. So that's what makes it a compelling buy.
Gentlemen, Kaiser, to you then, the utilization of your proceeds. You mentioned, Shirish, that you want to acquire assets as well.
Yeah.
Will the proceeds, some of it at least, be used to acquire some of those assets that you raised from the IPO? Or would it be used to pare down the debt at an SPV level? What are your utilization plans of your proceeds?
Yeah. So So the complete raise of 6,200 crore is a primary raise. All of that will be used to pay down the debt. In fact, that money is essentially used to sort of improve our balance sheet and strengthen the portfolio. And post the money, really, our LTV becomes 19%, which is the lowest LTV in the listed space.
And so post which you will be debt free at
maybe 19%.
19%.
Yeah.
Got that. So currently the portfolio is about 46.5 million square feet. You spoke about how you're actively going to be in the market to aggressively expand and acquire. So what have you set your eyes on?
So, for acquisitions, we're really being opportunistic, right? I think the key as a company going forward is we're going to make sure we have accretive acquisitions. These are going to benefit our DPU and distributions to our shareholders. And so it'll depend on the opportunity.
But is there something which is in the pipeline? Sorry to interrupt.
Well, we have multiple, sort of assets that we're going after. But I think they're too early. I think right now we want to get the IPO done, get our act together in terms of operations, and then sort of pursue the acquisitions immediately after. But we'll be in the major cities that we have already got a presence in. Pune is another example where we might expand into. Calcutta, maybe one more. And then over time, tier twos are getting attractive as well. So we'll keep our eyes open, but initially it's the major cities in India.
You're present in Gurugram, but is Delhi NCR not part of your expansion
Of course,
plans?
no, it will be. So I think we have one asset, but we're clearly looking out and will look to expand. It's a very strong market. And besides the three strongest markets that we have, Hyderabad, Bangalore, Mumbai, NCR is obviously the next one. So we'll look out for acquisitions as we go forward.
Kaiser, just to come back to the point about the dividend yield, right? It's 7.2%, it goes up to 8.2%. But now real estate is also a cyclical business. There are ups, there are downs. So, in a down year, where do you think the dividend yield can come down to? I mean, set the expectations right, for shareholders. Yeah. And especially as you are planning to expand even into tier 2 cities, where you may not be able to command the kind of rent escalation that you do in marquee properties in BKC, for instance.
Yeah. So I think that's a very relevant question. And I think we always say that real estate is cyclical and upturns and downturns. We take pride in the fact that our portfolio is very well positioned for the down cycles as well. And why we say that is because of a couple of levers of growth. So first, obviously a 13% NOI CAGR, which essentially comes from two big facts. One is obviously, sort of leasing up of the vacant spaces, but an even more is the mark-to-market potential of 23%, which is unlike any other listed peer. And what really sort of happens is that every time a lease expires, it gives us a natural reason for an uplift in our rents. And that's a big growth. The other big growth comes in from our contractual escalations, and those escalations, all our leases are contractually escalating at a 5% annually or a 12 to 15% every 3 years. So if you add all of these together, you're getting a yield of 7.2 on an average.
No, I get it, but this is the projection from FY25 to FY29, which is one real estate cycle that we're currently in, where your NOI projection is 90. NOI is net operating income. Projection is 13%. I meant, give us a sense, like say the last 10 years, last 15 years, where we've seen a cycle. What has been the average, operating income growth or the dividend? I mean, we don't have a dividend yield, but say the NOI growth.
Yes, and exactly to that point, because our rents are much lower than the market, we have enough cushion and buffer.
Even beyond FY29.
Even beyond FY29, because we have 23%, our current rents are 23% lower than the market. So in some ways, it insulates through a down cycle as well, right?
And also I would add that, to Kaiser's point, we've got assets which are very well located, good quality. So what happens, Rima, is in an up market, they benefit. But even in a down market, they're able to weather the storm the best. And I think that's the beauty of the assets we have.
If you could give us a sectoral breakup as well of your assets, which sectors do you have the maximum exposure to? Because there has been a lot of chatter or a lot of news flow surrounding the IT sector and the layoffs that are happening there, so on and so forth. Do you see any impact because of that? It's just a sectoral exposure.
I think that's a very relevant question. In fact, you're right. The IT services is going through a recalibration. Fortunately for us, the IT exposure, the traditional IT exposure is in low single digits. Most of our tech-linked exposure is through GCCs, and most of these GCCs operate very differently compared to like a project-based IT services firm. In fact, we take a pride in a massive, strong tenant diversity. 45% of our rents come from GCCs. And a big part of the other section comes from BFSI, pharma, engineering firms.
I think you also said last time 7 out of the 10 large top 10 clients are
Absolutely.
also GCC.
Yeah, absolutely.
Just out of time. Thank you very much, both Kaiser and Shirish, for coming down and speaking to us. Wish you all the very best.
Thank you.
Thank you.
Thank you very much for having us.
Glad to be here.
All right, on that note, we need to slip into a very short break. Don't go anywhere. On the other side, we'll discuss the market technicals. Videsh Thakkar joins in.
Some recovery from the lows of the day for the benchmark indices. We are back at the 24,650 mark as of now. But of course, that does not take away from the fact that there are a lot of movers in the broader markets. Godfrey Phillips is now up 10% as we speak. There are other movers like the New India Assurance. That is up 8.5%. Yash just spoke about New India Assurance last week after its results and some strong management commentary. So another 8.5% on that stock. And Tata Investment announced results yesterday, announced a stock split yesterday. They will be splitting their shares into 10, and that too is up 6% in today's session, slightly off the highs of the day, but still trading with gains of around 6%. Some other earnings reactions that have come by: Inox India down 5%. TBO Tech is down 4% as well. And some of these capital market names too trading lower, be it the likes of BSE or MCX. They run up as well. Quite a bit has MCX, so seeing some bit of a cool off from the higher levels. But what is the current trend within the futures and options space, considering we've seen a fairly choppy first couple of hours? Mangalam is here to decode just that for us. Mangalam.
It is indeed fairly choppy, and every time we move towards that 24,750, 24,800 mark, we see some supply. At the lower levels, there is some support coming between 24,550 to 24,600, and we are, seeing moves around this range itself. And right now, as we speak, we're on the lower end of that range. So Nifty down almost 81 points. We have the mid-cap index down 0.25%, though it's off lows, still fairly off highs. And then I looked at a couple of data points. August 1st low of 24,535, an important level to watch out for. And August 4th high of 24,736, which was yesterday's high, is the range in which the Nifty is likely to meander as we move forward. And that's what option writers are indicating as well, because the 24,700 call, which has a premium for almost 75 to 80 rupees, fairly well traded in today's trading session, telling you as you move towards 24,750 to 24,800, there could be some sort of resistance. But at the lower level, the 24,600 put writers are equally active for a premium of 75 rupees. That tells you that around 24,500, we could see some support that comes in for the market. For those who are writing the straddle of 24,650, they are playing for a broader range between 24,450 to 24,850 on the Nifty. A lot of stocks on our radar, long positions particularly added on a couple of these auto components. So we have Uno Minda and Sona BLW, both of them fairly well bid in today's trading session. But the capital market plays, all of them are seeing some short additions. So we have BSE, MCX, Angel One, all of them in the red on the back of some short positions being added.
Thank you very much for that. Mitesh is now back with us for a quick technical check on the markets. Mitesh, hi, welcome back. Your thoughts on the kind of little bit of a sell-off that we've seen in the last 1 hour, and what would your calls be?
Yeah, I think, again, I think it's just that the market is not directional, and that's why you're getting this choppy kind of moves. 1 day up, 1 day down. My sense is that keep a watch on the bank Nifty. If it starts trading below 55,400 and closes below that, we might actually see the bank Nifty correct by about 500-600 points, which could in turn have an effect on the Nifty as well. And both the indices could then slightly be trading lower. So watch the index closely. In fact, I had a sell on HDFC Bank earlier. So right now, even ICICI Bank is turning negative. So sell here with a stop at 1460 for targets of 1420. And both HDFC and ICICI, I think, command a fair amount of weightage in the bank Nifty. So that way, in that sense, it looks slightly on the negative side. And on the buying side is Jindal Steel and Power, which I would recommend buying the stop at about 974, targets of 1020.
Ritesh, thank you for joining in with your views on the index and on specific stocks as well. And the index currently still 85 points lower as we speak. And the other one that we were talking about is Mahanagar Gas. MGL2 is down around 3% in today's session. A couple of Nifty names reporting results today include the likes of Adani Ports. That comes out with numbers later in the day, and of course awaiting numbers from Bharti Airtel as well. That too is currently trading with gains of around 1%. Adani Ports has now almost moved into the green after recovering from the lows, and Bharti Airtel continues to remain at the highest point of the day. I take a short break, and just as we do that, some more market opinion. We spoke to Samir Arora, the founder and fund manager at Helios Capital, and listening to excerpts from that conversation.
You see the big pools of earnings. So IT is growing maybe 3-5%. Large consumer is excited if they grow 5%. And the large banks are growing 8-10%. And after 1 or 2 quarters, they may grow 12-14%. So as of now, the aggregate earnings growth is 9-10%. Therefore, it would be reasonable to think that over the next 2-3 quarters, or at least till the end of the year, you're only supposed to make another 5-6%, which is 1% per month kind of return will be great. This one I am not buying right now because, we have seen when there are these legal cases, one is just a results and growth and one day they're becoming earnings and all that. But here there are, you've seen how cases come up 1 year later and 6 months later. And this is a bit more complicated. Plus in financials and in banks, we already have our exposure. Keep going on and they drag. And they drag for years or 1 year, 6 months, whatever. Plus, in this, we have enough exposure in this sector, so we don't need to try it. The foreign flows are coming from Feb 1. If you see in aggregate from February 1, the flows are positive. This month, they were negative for 2 reasons, I think. One was the Trump tweets or whatever. And second was the results did disappoint a few people if you looked at them individually. So overhyped, I've always said these new businesses are normally overhyped. I have read many books on this, particularly the solar theme. They might be great for India. We need it for climate, but for investment, these things never work. And even IT is still overhyped.
Welcome back. The big news break of the morning was the fact that the new CEO appointment of IndusInd Bank, and that was approved by the Reserve Bank of India. Rajiv Anand is now at the helm of affairs at IndusInd Bank for a period of 3 years. Let us now revisit the news. Gaurav is joining in to give us a sense of what brokerages are making of this development as well. Gaurav.
Well, yes, definitely a positive move for IndusInd Bank, and the reason being that now Mr. Rajiv Anand has been appointed as MD and CEO. He will be taking over as a post of MD from 25th of August for the next 3 years. Now remember, RBI has approved the appointment, and we were the first one to break in that he could be a front runner in the series of IndusInd Bank's MD and CEO's search. Now, if we look at the track record, he has shown a very strong track record so far, more than 35 years of experience in the banking industry, and before joining IndusInd, he was also a part of Axis Bank as the as a deputy managing director. He was also one of the founding MD and CEOs for Axis Asset Management from 2009 to 2013, and he also has an experience in Axis wholesale banking business, and also he was responsible to drive the digital banking for Axis Bank. So definitely he has an experience for handling a bank which is bigger than IndusInd Bank, and that is the reason why market is taking this move in a positive way. Let's not forget that on 29th of April, Mr. Sumant Katpalia resigned from the post of MD and CEO, and within the 3 months itself, we are seeing this turnaround happening. And at the same time, let's also not forget that concerns around the fundamental problems of IndusInd Bank, they still remain. But given that there is a new phase to management, now market is taking it in a positive way because there will be some clarity on how the the bank is going to go towards that 1% ROA and even further going on. Other than that, now brokerages, when we look at them, they are also being a little bullish. Jeffries said that the reorganization of the top management is one of the key steps, but from here on, they will be watching out on if any other member from Axis Bank or any other bank is joining the bank. Citi is also a little bullish about the bank. What they're saying is that from here on, the key monitorable includes strategic roadmap, execution capabilities, and also its ability to turn around its operating profit. So definitely they are being optimistic, but a little cautious. And as a result, when we look at stock performance also, it is up in trade today.
Thank you very much for that. It's up 1% now, so it's come off. At one point of time, the stock was up nearly 4-5%. But let's talk about Triveni Turbine. Stock is tanking post the disappointing Q1 numbers. I think it's a top-down miss. Vamakshi joins in with the details.
Well, absolutely, Reema. Weak set of numbers for Triveni Turbines. Keep in mind that this time around, the performance was impacted by the geopolitical uncertainties. The revenue saw a dip of almost 20%, and this dip is largely being led by the domestic markets, which fell by almost 24%. Exports were down to almost 15% on a year-on-year basis. The gross margins, though, more or less saw a slight bit of an improvement by around 32 basis points. But given the kind of rise that we've seen in the employee expenses, which were up almost 14%, the EBITDA margins contracted for the company by almost 81 basis points, and the net profit saw a decline of almost 20%. So overall, a weak set of numbers. This time around, what the company has said is that the performance was extremely disappointing. It came in below their own expectations, and this is because there were deferment of dispatches as well as the orders to the subsequent quarters. This happened because of the geopolitical uncertainties, which is why some of the international customers could not complete their inspection on time, which has resulted into this dent on the results. As far as ordering activity is concerned, it was weak. The total order inflows declined by almost 16% on a year-on-year basis, and the exports is the main reason why this decline is being witnessed, because the exports have declined by almost 40%. Now, keep in mind that Q1 FY25 did have a large base for the exports, so therefore there was some decline on account of that. But apart from that as well, the management has alluded to lower export demand across products as well as the aftermarkets. Now, we also had some commentary coming in from the management. They say that the quarter's performance fell short of their expectations, but they, however, are taking efforts and they are trying to realign their operations, and they are confident that the company can manage its growth trajectory going forward. So for now, it's a disappointing set for Triveni Turbine. Resultantly, the stock is down and out in trade today.
Down and out indeed. 7.5% lower on that stock is the Triveni Turbine. Vamakshi, thank you for that update. Anirudh Garg from Invasset PMS is now joining in on the show. Anirudh, good morning. Thank you for joining in. Would you call this quarter a fairly resilient one considering the expectations that we had? Or would you still fall into that category that the earnings recovery that was anticipated is still a couple of quarters away?
I think. Firstly, a very good morning. I think that is the way the markets are. Markets are always future discounting, and that is what is happening in the markets right now. We are setting up a base for a better year to come. Though I believe that there will be some sectors which will continue to face these pressures going forward as well. But I think whenever there has been this uncertainty as is going on now, whenever there is confusion, whenever there is fears, especially the markets, not the companies, but the markets, they make better bottoms and provide a better opportunity of growth. We are very confident that in the next 3 to 4 months, we should see all-time highs on the Nifty.
All-time highs in the next few months. Can you quickly, Anirudh, take us through your top bets? I mean, the way your portfolio is constructed. I know, a couple of months back, you had said how Pharma was your big bet. 20 to 25% of your portfolio was concentrated in the Pharma healthcare bracket. How has it changed?
Okay, so now I think with the uncertainty coming over, though Pharma is still CDMO, CMO was our bet, I still believe there is steam left there. But overall, we had shifted from Pharma. Why? Because this uncertainty that Trump is, changing his stance every day, not behaving like the biggest economy in the world. So what we have done is we've made a portfolio Trump-proof. There are a lot of opportunities, domestic opportunities available. For example, the capital market infrastructure sector, defense and railways, and a lot of consumer names which are gaining traction. I think commodities are back in flavor. So we are just sitting on the side, and then if the things we get any early shoots of things settling down with the US, we'll enter those spaces again.
Anirudh, what about the capital market plays? There has been a lot of uncertainty regarding more regulatory action coming in for a lot of these players, but considering the fact that if the markets are bound to move higher, say over the next 5, 10, 15 years, do you see this as just another speed bump in what promises to be a longer term growth trajectory going forward for all of these players, be it the broking firms, be it the asset managers, and be it the depository participants as well, especially considering we have one listing tomorrow?
Yeah, so I think you're absolutely right here when we say that in the long run, see, the fundamental relative change is that the psychology of it is very, very difficult to change the psychology of the investor. We all come from the background where our parents and our grandfathers used to invest merely in FDs, and today FDs are no longer considered an investment by majority of the people because of those efforts of SEBI, AMFI, the mutual fund Sahi Hai campaign. People have shifted to the equity culture in the past 4 years. There's been tremendous change, and it is very difficult to get. It is I won't say a decadal change, but a generational change. And this relative change is much, much more stronger than smaller regulatory approvals. What regulatory approvals are happening, I think they will aid rather than stopping. They will aid the confidence of the people. They will strengthen it. So all these regulatory approvals where a few firms are making so much profit and the general public is losing, it is somewhere the duty of the exchanges and especially the regulator to check that such I would go to an extent of saying loot should not happen in the Indian markets. That is how the sanity and the trust in the market would be preserved. I'm totally with SEBI in it that options, I believe, are weapons of mass destruction unless used properly. And if they are doing it, delaying it to 15 days or maybe going forward into 30 days, I think it's a good move. The capital market infrastructure has seen a decadal generational change, and this change should continue.
NSDL, since we brought that topic on, I mean, did you all participate? Were you all subscribers in any firm at the anchor book or even otherwise? It's a very good subscription for a large issue. I think total was 41 times. And now once it lists, is there still any juice left?
I think there's still juice left, Rima, because these are the two monopolies out there. Yeah, it's a duopoly set up with one of the greatest, Indian markets. I believe Indian markets and your markets, they are the only two economies in the world where you will find democracy and demography both, which are very, very essential for stock markets to flourish. For these markets, there are only two depositories out there, CDSL and SDL. So I'm very, very bullish for them in the long term, though we have not subscribed to it because as per policy, we do not go in for IPOs.
Anirudh, a lot of these chatter around the tariff-related bit has had a lot of impact on all of these textile names, be it Gokaldas, be it KPR Mills, be it Wellspun, and the peers and so on. But do you believe that this higher tariff rate is detrimental to their prospects? And if you do have exposure to them, what do you recommend doing now, especially considering that there is an overhang here and there is, even if there is a deal that happens, this uncertainty is likely to continue to persist for at least till the current US president's term goes on. So what do you do with these textile stocks, particularly those that have a significantly large exposure to the US?
Okay, so we were primarily bullish on these companies because we believe that somewhere sanity will prevail and the better ones, the ones which are professionally managed, will rise from the ashes. But from what the US president is doing temporarily, I think it's okay to hold on. We don't have much exposure, not more than 3% of the total portfolio towards the US export-oriented sectors, but and definitely not more than 5 if we indirectly count the other companies as well. Going forward, I think US doesn't have an option. It is just trying to negotiate. I think offense is the best defense is what US is doing in a race which it lost to China just because it did not take toll in time. Now it is doing it, and the only way to do it is what US. I think one of the ways to do is what Donald Trump is doing. So ultimately, they're all politicians. Sense will prevail, business will prevail, profits and money making is permanent. Somewhere, I think things will get back to normal, and all the better ones will, of course, make, as quality makes a higher high every time, the better ones will prevail and become even bigger from here.
Thank you, Anirudh, for joining in. That's Inva Asset PMS. They expect new highs for the market in the next few months, and they've made their portfolio Trump-proof as of now. So there's a big tilt in capital markets, domestic plays, whether it's in consumer, railways, defense, etc. Get into a break. On the other side, we'll tell you what the street expects from the RBI MPC tomorrow. Welcome back. All eyes will be on the RBI MPC decision tomorrow. What's the expectation? Ritu is now joining in with that. Ritu.
Well, the RBI's August policy meeting is shaping up to be anything but predictable. A CNBC-TV18 poll of top economists shows a clear split, half expecting a 25 basis point cut, while the other half say the MPC will hold rates steady. But zoom out and look at the broader macro picture, and inflation has dropped to a 77-month low. CPI is expected to average below 3% through the year, and some, like SBI, for instance, are warning that not cutting now could be a costly type 2 error, essentially waiting too long and hurting growth when inflation is already under control. But most economists see the terminal policy rate settling at 5.25%, and that means one more 25 basis point cut will wrap up this easing cycle. When asked about when that last cut will come, the poll is split again. 30% say August, 30% October, with December still leading, signaling we're near the bottom either way. On the stance, there's no ambiguity. All expect RBI to stick to the neutral stance, though the tone could lean towards dovish because inflation is softening and growth signals are turning mixed. Speaking of growth, 70% believe RBI will leave its forecast unchanged, but it may flag some signs of slowing momentum. On inflation, 90% are expecting a downward revision, to possibly around 3 to 3.3% because of the easing food prices and favorable base effects. As for the tone, 60% expect it to be neutral, while 40% are leaning towards dovish, which aligns with the improving credit transmission and continued liquidity surplus. But the wild card is tariffs and trade tensions, where half the economists say no policy impact because of this specifically, but 40% do say these external headwinds could push RBI to ease further, but most agree it's still a wait-and-watch game. Finally, do keep an eye out for revised liquidity management frameworks coming out, any commentary on the growth narrative, and a possible extension of the external benchmark-linked lending rates to NBFCs as well.
Ritu, thank you for that update. Take a short break. Put the spotlight on the two major earnings later in the day, Bharti Airtel and Britannia on the other side. Steve.
Welcome back. Bharti Airtel will be the big number to watch post-market hours. Now, remember, Bharti Airtel is a sum of parts. So, on a consolidated basis, the poll is for a 2.5% revenue growth. What we know already is Airtel Africa and Indus. Airtel Africa was a strong set of numbers, a revenue growth of about 7.5%, EBITDA growth of 9%. Basically, Airtel Africa was a good set of numbers because in their key market, Nigeria, there was a tariff hike. But Indus Stars on the other side, which is now being consolidated in Airtel, was a bit of a disappointment. Now, what will the street watch? The India wireless performance. And here, it's going to be a fairly lackluster quarter because there are no tariff hikes. The last tariff hikes took place in July, so that flow-through has completely happened. The only thing that helps on a quarter-on-quarter basis is there is one extra day. So ARPUs could inch up and come to levels of about 250 to 251 rupees. On the subscriber front, things have been slowing down for Bharti versus a Jio. Now, at least as per the TREI data, Bharti has added only 1.2 million subscribers in Q1, while Jio has added close to about 7 million subscribers plus. So we're going to watch what the company has to say about that, and are they losing market share or losing sleep over the loss of market share. Now, recently, UBS also downgraded Bharti from a neutral to sell. One, they're saying the probability of a tariff hike cannot be ruled out because tariffs in India may be lower than that of the developed markets, but they're in line with global emerging markets. So there will be a tariff hike, but the quantum, and it could be even delayed. So they're expecting a ARPU CAGR of about 10%, lower than what market is. Also, the street was betting that, now that the capex intensity is behind companies like Bharti Airtel, they've done their rollout for 5G, etc., the free cash flow will improve and therefore the companies will start giving more dividend. Now, they gave dividend last year, but that disappointed the street. And according to UBS, even the dividend yield will expand, but not as rapidly as the street was hoping for. And the final point that UBS made is that the valuations are in line with some of the regional peers. The stock also, by the way, is down about 5.5% from its recent highs. But all in all, for the India mobile wireless business, expect a fairly lackluster quarter.
Expecting a fairly lackluster quarter. All eyes will be on whether they do give out any dividend or not this time around. So keep an eye out on Bharti Airtel, still closing in on the highest point of the day at 1930. The other one, of course, is Britannia. Mangalam is here to tell us what the street is expecting from there, Mangalam.
Well, the stock has done well. It's up around 25% from the start of this year, down little today, but ahead of numbers. The street is expecting gradual recovery in urban and this resilience in rural to continue. The monsoons have been good as well. Raw material prices are volatile. That may impact gross margins, but remember the company has a very strong cost program and that may support EBITDA margins as well. So revenue growth of 7.5% is what the street is working with. You're looking at a number just shy of that 4,600 crores on the top line. The EBITDA grows at around 8%. You're looking at 814 crores on the EBITDA. This compares with close to around 753 crores. And the margin stays steady at around 17.8% too. Net profit on the back of an 8% EBITDA growth comes in at 12%. You're looking at a domestic volume growth between 4.5% as well. And the overall revenue growth would be led by 3 to 4% price hikes too. Management commentary on demand, raw material environment, but more importantly, what they do with their newer ancillary products is something that I'll be watching out for closely.
Thank you very much for that. And that brings us to a close in this edition of Trading Hour. From the entire team, thank you for watching. Don't go anywhere. Halftime report is up next.